You're tuned into Market Today. I'm Tanya Aneja, and with me, as always, is Shailendra Bhatnagar, our markets editor. Well, festive cheer is all around the last street, but where are the markets going? Where are the markets headed going forward, and where are the pockets of opportunities? We'll discuss this and much more. But first, let's do one thing. Let's take a quick market check and see how the markets are doing at this point in time. Well, Nifty is trading flat as it can be. 19,399, that's the level, hovering around that 19,400 mark, down around 45 odd points at this point in time. And Nifty Bank is in the green today. 43,718 is the level. So some of the banking names supporting the markets as we speak, 60 points uptick there. And it's the broader markets where the action is happening, and especially mid caps. 125 points uptick there, 40,573. Mid cap continues to outperform in how. Small caps, however, they are not able to perform today. 13,324 is the level where we are at as far as small cap index is concerned. Let's do one thing. Let's pull up some of the gainers for you. And actually, it's the auto day today. And some of the auto names are trading in the green and are among the top gainers. Look at M&M. We have results tomorrow, and ahead of the second quarter numbers, 1540 is the level of on M&M, 3.5% uptick there. Apollo Hospitals, Coal India, some of the other gainers for you. We have numbers today of Apollo Hospitals as well. Hero Auto, yet again, another name from the auto space, 1.5% uptick there, and Power Grid, IndusInd Bank, some of the other gainers for you. On the flip side, let's see the list of losers from today's trading session. And Adani stocks, some of the Adani stocks like Adani Ports and Enterprises, they are in the red, trading around 2% lower in today's trading session. Some of the FMCG names not supporting the markets as we speak. But let's do one thing. Let's, we have the guests with us as well. But firstly, coming to you, Shell, flattish day for the markets, but I am actually all set for Diwali, and its cheer is actually all over on the last street. What's happening at your side?
Good afternoon, Tanya, and a very warm welcome to all our guests, viewers, investors who've tuned into business today at this point of time. Well, it was the weekly expiry of Nifty, so this flat trade is more or less on expected grounds. I'm imagining that somewhere like 19,400 is where the index will take some kind of strong support, and that is where the weekly closing will be. Of course, there's just a day left for Diwali festivities, as also 2 days ahead of Muhurat trading. So it's only earnings led. Look at how Marksans Pharma is doing. Look at how Nelcast is behaving. These are stocks that are from the mid-cap space and have come up with a sterling set of numbers on a quarterly basis, and both of them at record highs. You see Marksans Pharma 8% higher, very, very strong volumes in front of you, as also Nelcast Limited. This is a forging company, and you'll see the price at about 177. Early in the morning it was about at 190, 195. So that's the kind of moves that are coming in on an individual basis. When you look at Mahindra and Mahindra, Tanya, about 4 or 5 days ago we had looked at the 1490 call of Mahindra, and at that moment the call is trading at 65 rupees. We had pointed this out somewhere like 17, 18 rupees. So that's how options are performing. Nifty and Bank Nifty are of course flat. There's nothing much to do there. But a very, very strong move that you see coming within the F&O space is Chambal Fertilizer. Remember, this was the first stock that today Rajesh Palviya discussed in the morning trade. One of the strongest and the most bullish charts that you see as of now. Volume is up 44%. OI is up 6.5%, and the stock itself showing intense long build up 2.4% at about 304.20. That's how the structure is. Lots of changes happening. The Bollinger top on Chambal has been broken. You see the reversal of the short-term trend. It's now moving up, and of course there is the counter which is above the first resistance. This is Chambal for you. This is the 305 call. Our PCR is now firing it on its own. Wonderful, 8.65. Nothing much to do here, but the fact is that this is one of the strongest charts that you see on the screen. Let me just try and see the chart here in terms of the daily move. I'm sure you'll see it on the screen as well. 2 days of gap ups, and at the moment somewhere like 77 lakh shares have been traded, so fairly strong move coming in. And remember, this is not a record high or a 52-week high. This price was seen earlier in February 2023, so a bit of a reversal happening as far as the trade is concerned, and a nice swing trade in the making on the long side. So these are mid caps that are outperforming. Tanya, what else have you noticed?
Actually, Shell, let's do one thing. Let's welcome a guest on the show today. We have with us Mr. G. Chokalingam, who is the founder and MD at Economics Research. And we also have with us Ruchit Jain, who is the lead research analyst at 5paisa.com. Gentlemen, very good afternoon. Festive greetings to both of you. And welcome to BTTV. Mr. Chokalingam, coming to you first for a quick market outlook check. How are you approaching markets, first of all, ahead of Diwali? And how do you look at the range-bound trade that we are seeing at this point in time?
This Diwali has been a phenomenal for investors. Hardly anybody missed to make wealth in this Diwali as compared to last Diwali. So therefore, my suggestion is that whatever wealth you have made in the last 12 months, try to preserve, ensure that it is not just an illusion, it's a real, because I am little nervous on the small and mid cap space now. There has been a phenomenal rally. There is a lot of bubble in many small and mid cap stocks. And if you look back the last 15 years history, every time after a massive rally, the small cap, mid cap indices have cracked in a very big way. I don't know when, but certainly the correction is in the offing. You have, the state elections coming, and you have wars in Ukraine and Israel, and there is some tension in Taiwan once in a while. And third factor, oil price. It went up by 30% in 45 days, and then again in 45 days it is down by 17%. So there is a lot of concern whether oil will spike or crash. If it crashes, it will be good for India, but it again spikes, it will be bad for India. So put together, I believe, around the current market cap of 320 lakh crore, even couple of percentage of that market cap comes for profit booking, and smart investors demand liquidity. It would be very difficult to find that kind of liquidity without the small and mid cap space falling very bad way. So therefore,
Okay.
I would advise a lot of caution, especially in the small and mid cap. This is a time for booking profits and preserving the wealth in the real terms.
Okay, absolutely, Mr. Chokalingam. And since it's almost Diwali, would you like to share some of your Diwali picks with our viewers?
Yeah, certainly, yes. In any market, there will be always a great opportunity for medium to long term. And therefore, I would suggest three stocks. One is KCP Limited. It's a diversified company, sugar, cement, and also a lot of land bank in Chennai, very close to Adani Port. This one stock, I believe it has a potential even to become a multi-bagger. And second, Bombay Burma. This is my old pet name. And in both stocks, I have also personally invested, KCP and Bombay Burma. Now, Wadias, they had a big investment in Go Air, which has become zero now. And among the existing companies, the resourceful companies, rich in resources, are Britannia. Right now, Bombay Dyeing also, after selling the land. But unfortunately, the promoters, individual promoters, do not have any meaningful stake in Britannia. In Bombay Dyeing also, it is only around 17%. In these two companies, Bombay Burma has a dominant stake. Bombay Burma has a 50.5% stake in Britannia and 44% in Bombay Dyeing. So in Bombay Burma, the promoters have 74% now. So logically, I believe the time has come for considering unlocking value from Bombay Burma after Go Air episode. It may happen or may not happen, but I am pretty confident that Bombay Burma at 87% discount to its market value of investments it deserves improvement in the holding discount. Third idea would be Geo Financial Services. I believe that it's a long-term multi-bagger, including the value of Reliance shares. It trades at around 1.5 times price to adjusted book value. I believe in 3 to 5 years, it can become a phenomenal multi-bagger with Reliance support. And each every financial service segment, I'm pretty confident Geo would tie up with the global leaders. Already they have done it in asset management. I expect many more such events to come. And I find it extremely attractive in terms of price to adjusted book value, including the value of Reliance shares held by Geo Financial.
Right. Those were three wonderful shares that could be added in piecemeal format to your long-term portfolio by Mr. Chokalingam. Getting Ruchit into the conversation. Good afternoon, Ruchit, and welcome to Business Today Television. How are you watching the two main indices, Nifty and Nifty Bank? In one case, we are above 20 EMA as far as the Nifty is concerned. And we've seen a very, very strong rally post the breakout of 200 EMA on Bank Nifty. Your views for the remainder part of November for these two indices?
Yeah, hi, very good afternoon, Shail. Very good afternoon to everyone. Well, if you look at the indexes, the recent up move which you have seen from the lows have been more because of short covering by FIIs. If you look at FII's data about 1 week ago, then they had about 88% of the positions in the index futures segment on the short side. That positions have reduced a bit to 80%, but still they have a lot of short positions intact in the system. 80% short positions and almost 2 lakh contracts on the short side versus somewhat around 45,000 contracts on the long side. So I think the positions are still short heavy, but the thing is that we have already seen a pullback move and market says now in the short term is nearing that resistance of 19,450 to 19,550. And the momentum readings on the lower time frame charts, that is hourly chart in both Nifty as well as Bank Nifty, are in a bit overbought zone. So we are expecting some consolidation at least for next 1.5 weeks, wherein markets would take resistance whenever it goes higher towards the 19,450, 19,550 range. And on the lower side, 19,300 to 19,250 would be seen as the immediate support level. So I think considering that the outperformance is more from the mid caps and the small caps, where the broader markets have been doing well, the small cap index is trading at its all-time high. So I think such stock-specific moves would continue for rest of the November series. But on the index front, we are not expecting any large move from current levels. As I said, 450, 550 would continue to act as a resistance. So we would advise a buy on dip strategy rather than chasing the markets at current levels. Whenever we see a correction towards that 19,300, 250 mark, I think that would ideally be good range to create some long positions again. Now, as far as banking is concerned, a relative underperformance has been seen in the Bank Nifty index in this pullback move, where Nifty has retraced almost 50% of that previous entire correction, which we saw from the all-time highs to recent swing lows. But Bank Nifty has retraced only 38.2%. So relatively, we have not seen any significant strength from the banking heavyweights, such as if you look at SDFC Bank, ICICI Bank, State Bank of India. So such heavyweights have not participated yet. So I think banking still needs to surpass that 100-day exponential moving average, which is placed around 44,000 marks. So that's a crucial resistance level which is placed in the banking index. And once we see a breakout above 44,000, then I think the banking would show a catch-up move or a good momentum. So I would wait for a breakout above that 44,000 mark. Otherwise, till then, I think since it has relatively underperformed in the pullback move in last 1.5 weeks, I would rather stay away from creating fresh longs at current levels and wait for any dips for going long.
Right. Ruchit, let's continue this conversation and shift focus to individual stocks. We have Mahindra's earnings coming up late in the day today, and I'd request you for your positional view on the stock. We've seen it correct fairly sharply from somewhere like 1675 to all the way down to 1440. A very sharp bounce coming in today. What are the charts telling you positionally, and how do you see it, say, in the medium term?
So the overall trend for the stock is still positive. What we have seen in last few months that the price up moves were supported by good volumes, but although the stock is corrected from the highs, but there has not been very high volume sell-off. So whenever we see such structure where corrections are with low volumes and price up move are with good volumes, I think the stocks tend to find support buying interest whenever they come towards the support level. So I think similar structure is there for Mahindra and Mahindra as well. 1450, 1460 is a good support range from where this today's up move has been seen. And if you look at the volumes today, then the volumes are quite good than the daily average volumes. And whenever from support levels we see a price up move supported by higher than average volume, no, these are quite positive signs. So from a short term perspective, I think 1580 to 1600 will be the resistance immediately, where swing high of October is seen, and also call writing positions are seen at 1600 for now. But no, I think from a medium term perspective, the stock has a potential to clock new record highs above that 1670 mark, which was seen in the month of September. So for midterm, it's looking quite bullish. I think such corrections which we saw in last few days, these are good buying opportunities in Mahindra and Mahindra.
Okay. The other thing I want the PCR to show is the 1490 call on Mahindra and Mahindra. Remember, this one was discussed somewhere like 6th of November. And you will see the price of the 1490 call in just a moment. It's at about 69 rupees. And on 6th of November, this was trading somewhere like 17, 18 rupees when we had sort of looked at it, between 20 and 25 rupees. So that's how options trades work out in your favor, provided you know which direction the market is headed. So we've discussed the Nifty Bank, Nifty as well as Mahindra and Mahindra. In your opinion, Ruchit, where do you see the maximum strength within the Nifty group as far as individual stocks are concerned? Where do you think dips, if any, should be purchased, not only for November but maybe for the longer term as well? What is looking good on your charts?
So two sectors where we are seeing some positive action is one is the auto space, where the strength is seen in some of the stocks. We have not seen any kind of sell-off in this recent decline. And I think Maruti within this space, if I come down to stock specific move, then the stock is trading quite close to its mid to long term support. So we have already seen some price-wise correction from that recent highs of 10,800 to 10,200, 300 odd range, where good support is placed. The momentum readings are on the verge of giving a positive crossover RSI oscillator again from year level. So I think auto would be one sector which one should watch out for, where price upmost could be seen in rest of the November month. Maruti and Bajaj Auto, these are two stocks that are on a buy list. And apart from auto, I think pharma has been doing quite well since last couple of trading sessions. And in fact, if you look at diagnostics and hospital names within the pharma space, I think that's where the outperformance has started, along with good volumes. And it's not only on the short-term charts, but the medium-term charts of stocks such as Lalpath Lab or Apollo Hospitals are looking quite bullish over here on. So apart from auto, I think pharma and hospital diagnostic related stocks should be in focus. Apollo Hospitals is one of the stocks which we have recommended in our Diwali pick recommendations for mid to long term as well. And apart from that, as I said, Lalpath Lab also is one stock where good price volume action has been seen. So these are some spaces where if one has to take some long bets from a short to medium term perspective, then one can go create fresh longs at current levels.
Absolutely got that. And auto space is, by the way, on my radar as well. And coming to you, Mr. Chokalingam, for this space only. I mean, the decline in major commodity prices has been actually fruitful, and the margins have also started to improve as far as auto space is concerned. So I want to know it from you, any picks that you would like to share from this space, and your thoughts on M&M and Ashok Leyland also, because we have Ashok Leyland numbers as well coming in today only. So your thoughts?
I have a bias for large cap, especially index stocks. As I mentioned, I have a fear on small and mid cap. So therefore, we have a buy recommendation on Maruti. I would continue to recommend Maruti. I believe M&M and Ashok Leyland, to a large extent, they already played out. And particularly in case of M&M, I think the tractor segment is likely to drag down overall performance in the next 2 quarters because of marginal deficit in the rainfall and very poor or relatively very low water storage in major reservoirs. And therefore, among these three, I would reiterate my conviction in Maruti. Of course, though I am negative on small cap, a few small cap stocks we continue to recommend, because that could be outperformer even in the falling small cap segment. So one such stock is Automotive Axles. It's a joint venture, it used to be, and Kalyani Group, and it has posted very impressive results. And what we are seeing is that there is a lot of uptick in the commercial vehicle sales, which is positive for Automotive Axles because it supplies wheels largely to commercial vehicles. So therefore,
Okay.
in the space, these two stocks I would suggest.
Okay, absolutely got that. And I think we should also pull up PFC. It's the top gainer from the mid cap space today. And coming to you, Ruchit, for PFC, company posted a good set of numbers, 20%, 27% uptick there in its net profit. So, what do the charts suggest for PFC?
Tanya, there is no doubt about the trend for both PFC and REC. We have seen in last 1 year they have given phenomenal returns, and what we have seen that even in minor corrections, the stocks witness buying interest as soon as we see the stocks approaching their supports. So even in today's trading session, if you see, in spite of such a rally, the stock is witnessing very good volumes along with the price up move, which seems that this uptrend is likely to continue going ahead. Now, since it is trading at all-time highs, it's very difficult to give any target projections where this rally would stop. But I think it's the best way to ride this trend is to find supports, keep the stop loss below the support level on your existing positions, and continue to ride this trend until there is any kind of reversals. So short-term supports for the stock are now seen around 269, followed by 260. So I think any existing long positions, they should continue to ride this trend with the stop loss below 260 rupees. And as the stock price goes higher, it's better to trail the stop losses higher.
Okay, these are the stocks that have been discussed on a fairly regular basis on Business Today television. One point I wanted to raise about Mahindra and Mahindra, Tanya, is that after Reliance, M&M stock futures are the second most active counter within the F&O space, and that itself points to enthusiasm about the stock, about the futures before earnings have come in. Let's see how that pans out, but for the moment there's a very nice green tick coming in on Mahindra and Mahindra. The other counter, Ruchit, I wanted to check with you is of course Ramco Cement. It's early days as far as prices are concerned, 1.3% higher, but this is accompanied by a very sharp increase in open interest. What do you think of Ramco on the charts? It seems to be in a very nice and smooth uptrend as far as the cash stock is concerned. 880 to 1021 in a span of 1 month.
Yeah, so we have seen a gradual up move, and the stock has been forming this high top, high bottom structure, which is a quite positive sign. And if I look at some of the positional charts, then the stock has managed to find a good support base around its 100-day EMA in the recent dip as well. So I think this slow and gradual up move could continue going ahead, and 1080 to 1100 is where the next resistance, previous swing high resistance for the stock is placed. So it's better to ride this trend if you have existing positions, and if you get any dip in the near term towards 950, 970, that should act as a good support now on any decline. So buy and dip strategy should be kept for Ramco Cement, but yes, if anyone is bought at lower levels, then they should hold for a potential targets around 1080.
Okay. Getting Mr. Chokalingam in and requesting the PCR to fire the long-term chart of CDSL. Mr. Chokalingam, you've been in the market for now over 30 years, and we've seen this shift towards digital technology in the financial space. A lot of benefits coming in for brokers, especially the listed space. Look at CDSL over the last 10 odd trading sessions. It seems to be having a race to the finish with Bombay Stock Exchange. What is the underlying business? Do you see some improvement? Are these levels worthwhile, or is this also overheated?
One can hold on to CDSL because we know that recently it slipped even below 3,000 rupees. I agree with you. The long-term potential is good. Even in the short term, I don't know how many have noticed it. Last 3 years, continuously, every week, minimum 5 to 8 lakh new retail investors are registering in the capital markets. Even last week, it was more than 6 lakh number of people who registered in the capital market. So CDSL will be a direct beneficiary. But then, the stock also already discounted this good development. So therefore, I would suggest to hold. In case it falls 5-10%, then one can ensure for the long term. Otherwise, in the short term, potential is limited. In case market falls, particularly small and mid cap, this can correct also, because from the bottom it has rallied a lot. But otherwise, however, for a long term, this is a good stock to hold.
Okay. Ruchit, would you step in on how technically the charts look for the medium term? In the short term, it's absolutely overstretched. Let's not, look at how people can benefit immediately. But in the medium to long term, what are the, the monthly and the weekly charts of CDSL talking to you about?
The mid to long term charts are also quite positive. This last 3 weeks up move has been supported by very high volumes in the stock, which is usually a good sign. And if I put some retracement, the stock is almost about to cross that previous swing high, which we saw around 1700 mark. And usually when the stock goes, any stock goes towards all-time high, we take reciprocal retracements of the previous corrections, which gives us the potential targets technically at all-time highs. And such targets are seen around 1900 rupees in short to medium term, which is the 127% retracement of the previous correction. And on a longer term charts, if I look at further retracements up to 161.8%, then these are giving targets around 2200. So I think 1900 over medium term and 2200 over longer term, this is where the stock could potentially go higher. So the trend still continues to remain positive. The only hurdle is the 1700 mark over here right now, where we are trading in the short term, which was the previous swing high seen in December 2021. And once that is crossed, I think the momentum is likely to accelerate further.
Okay, so gentlemen, if you have a delivery of this stock, please don't exit. It would be an exercise in futility because over the next 1 or 2 years, you'll see a lot of good moves coming both on the stock as well as on the business of CDSL. And this is one of those rare monopoly plays that you see working within the brokerage space owned by the government. So there is extremely low, if non-existent chance of problems with the balance sheet as also the P&L account, and it's a phenomenally well-run, very profitable company. This is the time to sort of let it remain in your portfolio if it is, and pray very seriously to God to try and get a correction into this stock, and if it does, then that's the time to grab it with both hands. At the moment, 1685, and a very strong uptrend seen in this one over the last 10-12 sessions. Tanya, what is on your plate? We are now on 3:16 p.m. 14 minutes left for the market to close.
I think, Shal, we should discuss Lupin also. I'll come to you, Rujit, for a quick technical check. But firstly, coming to you, Mr. Chokalingam, for a long-term view on Lupin. I was listening to the management, and the major growth driver this time around has been Spiriva. That is company's new product. So coming to you, Mr. Chokalingam, first for Lupin, what are your thoughts and how do you look at the numbers?
No, I used to track Lupin for a very long time. Of course, I became a victim of its poor performance also in the past. And I looked at the fundamentals, and the stock has rallied. But compared to fundamentals, I prefer Zydus Life Science to Lupin because of inconsistent performance over a longer period from Lupin. And secondly, in terms of valuation, Zydus Life Science is a better pick. In terms of valuation and performance. So therefore, I would suggest Zydus Life Sciences.
And what about Alchem, Mr. Chokalingam? Would you like to share your thoughts on that counter?
Alchem also, I saw the results and performance. It's a good stock for long term, no doubt. Both are far superior to Lupin.
Okay, absolutely. Got that. And coming to you now, Rujit, for a quick technical check on Lupin, Zydus and Alchem.
So if you look at Lupin, then we have some negative divergence on the shorter time frame chart, where the recent price up move, which has made a higher top, but it has not been supported with a higher top in the RSI. So usually when we see such prices making new highs, but not in the RSI, then we could see some minor corrections within an uptrend. But broadly, if I look at the stock within the entire sector, then last few months, we have seen a good outperformance from Lupin compared to the other stocks within the same sector. So I think this outperformance would keep the momentum intact over medium term, and whenever we see any kind of declines, good buying opportunity could be seen in rupee. So buy and dip strategy I would recommend rather than chasing at current levels. The major support for the stock is around 1140 to 1060 range. So in case if we get any dip towards that range, then I think that should be taken as a good buying opportunity. And apart from this, even Elchem Labs, the stock structure has been quite positive. After a good consolidation around its 100 EMA, the stock has resumed its uptrend with very good volumes in last 3 or 4 trading sessions. So I think this outperformance could continue in Elchem Labs as well. And according to retracements, target projections for this in the short term are seen around 4600 to 4650 range.
Okay, we are now at 3:20 p.m. almost, and we'll give Ruchit some time to take some long breaths, and then he'll give us one BTST or one STBT trade for tomorrow. Meanwhile, just let's take a look at how markets are functioning. I just want to review everything before they conclusively end for Thursday, which is the weekly expiry. Let's start with the Nifty. The top gainers on the Nifty at the moment are M&M and Apollo Hospitals. Remember, M&M is a stock that we've been following since 1490 rupees, and at the moment at 1551. This is the top gainer as far as the Nifty is concerned, and the second most active F&O stock future on the National Stock Exchange, and this is ahead of its earnings. A beautiful swing trade in the making if you look at the daily charts. This is the intraday chart in front of you. Apart from M&M, there is a very strong move coming in Apollo Hospitals, anxious to reclaim its previous all-time high. 5315 in front of you, high ticket size here, 3.4% higher. Coal India and Power Grid from the energy space, as also the PSU basket, are shining 2.2, 1.5% respectively. As also a host of auto stocks in the green ahead of what is the festive weekend of Diwali. So some extra heavy duty sales expected this weekend as a lot of Indians buy new vehicles in this particular week. Therefore, Hero Motors, Tata Motors, Maruti and Bajaj Auto, all four auto stocks making up the Nifty, are in a very, very strong uptrend. On the losing side, we have two Adani twins. Adani Enterprises down 2%, a bit of a increase in open interest as well. So this is a build-up of shorts that you are seeing, as also Adani Ports 810, a bit of profit booking after 2 days of rally. The counter down 1.5% with an increase of 1.2% in open interest. Nothing much to be worried about. Then you have the two FMCG giants, Hindustan Unilever and Tata Consumer, down about 1.5% each. I won't be much worried about them. This is how the Nifty is shaping up. As far as the broader markets are concerned within the F&O space, you have Metropolis being the top gainer, 5.5% higher. Very, very strong moves coming in, accompanied by a decent rise in open interest, 2% higher. This is not a stock that we talk of often, but it's the entire hospital sector which is doing phenomenally well today, and Metropolis being the top F&O gainer in trade today, followed by PFC, M&M, and of course City Union Bank, as also Granules and Godrej Properties. These are the stocks that are up between 2.4 and 2.7%. Amongst the losers, MCX down 6.4%, almost 2450. National Aluminium, Motherson Sumi, and profit booking happening in Deepak Nitrite. This is the broader view on the F&O space. Let's look at where you see the broader markets in terms of advanced decline ratios, as also other indices. So it's about 800 stocks in the green on the National Stock Exchange, 1200 in the red. So the ratio is 2:3 favoring bears. In terms of indices, the 19 that we track, there are only 3 handful of them which are in the green: Realty, Auto and Midcap 100. Otherwise, you see intense profit booking in the FMCG index down 1%, Nifty IT index down 0.5%, and the Nifty Metals index down 0.3%. This is how the broader markets are there, and I am sure that Ruchit is now ready for a great trade for tomorrow. What looks good to you, Ruchit, on the charts? What would you suggest, BTST or STBT?
So I'll suggest on BTST in stock-specific moves, and within that entire hospitals and diagnostic basket which you just spoke about. Metropolis is looking quite good to take home for BTST because the stock has given breakout above its previous swing high resistances today, giving a quite comfortable close above that resistance level, and also the volumes have been quite good compared to average. So I think this sector will be buzzing tomorrow as well. Metropolis currently around 1625. One should take this as a BTST with stop loss below 1575, expecting target somewhere around 1690 to 1700.
Okay, so Ruchit has decided to go with momentum. It's the top gainer for today's trade, and Ruchit is of the view that this rally will continue. 1625 is already the highest since we've seen in November of 2022. So 1 year high on Metropolis, and the all-time high for Metropolis is, hold your breath ladies and gentlemen, 3551. So there's a lot of room. So great piece to be as far as the healthcare space is concerned. Mr. Chongalingam, would you have a view on Metropolis Healthcare?
I looked at almost all hospital. There is hardly any hospital stock which gives me comfort. Recently, I have not looked at its enterprise value per bed. But what I would suggest that in any hospital stock, look at the EV2 per bed, and even for diagnostics, if they are available at around 25 PE, you buy them. Beyond that, you be little cautious. And to be very, frank, I find very difficult to identify attractive stocks in both hospital and diagnostic space.
Right. Mr. Chokalingam, it's more than 35 years for you in the space of markets, and if you recollect, both you and I used to talk about a Delhi-based company called Moser Bear. This was in 2000-2001. Your erstwhile employer had a very decent stake in that particular company. Probably what has happened is that for people like us, our valuation models are, maybe 5, 7, 10 decades old. And we are unable to comprehend the kind of shift in liquidity that has happened in the market. And we see it with the lens of, a PE of sub 30, PE of sub 25. When, 40 PE becomes 50 PE, and then both of us cry.
Absolutely. You made a very interesting point. First of all, on Moser Bear, I initiated around 300 and I closed the call at $1,000. So I escaped the carnage in Moser Bear. And secondly, on valuation, I absolutely agree. This is the biggest problem for people like us. I paid a price in 1819. I was in the public domain, all through last 20 years. So 2018-19, absolutely what you said was right. It made me to learn, rethink about my valuation models, because we went for a deep value and we missed out the great rally in 1819 when, as you said, IPE became IRPE. Definitely, you made a point, but still what I want to tell you is that massive rally in the valuation multiple is not sustainable. Yes, you have to compromise at margin. Like hospital stock, I have bought even stocks with a 3 crore or 4 crore per bed. But definitely when you buy a hospital stock with 8 crore per bed, they will come, it will definitely crack. Yes, upside you can make compromise and make money. When downside comes, valuation will matter. So compromise at margin, but don't give up your valuation. That is a dangerous game. That's what I learned.
Right. Patient men like you and me, Mr. Chokalingam, have to be sort of happy with what we know rather than what we can learn at this age. And God is very kind. He sends all the good picks to us as well in terms of decent to normal valuations. It is for the age group of Ruchit and Tanya to develop newer and better models on valuations and charts and options and Greeks and meta Greeks to make more than decent money in the shortest possible time. Am I right, Ruchit?
You cannot ignore the experience, right, that you guys have. And I always believe that it's a combination of experience as well as new blood or new learnings that should be taken for whether you are a short-term trader or whether you are an investor.
चलो अब सबकी तारीफ हो गई. Now let's give it to Tanya to start wrapping up the markets. Tanya, to you.
Absolutely, Shail. And I think the good part is that we are always, ready to learn. from market gurus like you and Mr. Chokalingam.
No,
So,
Mr.
am I right,
Chokalingam is a
Richard?
market guru. I am just the person who asks questions.
Oh,
If I can intervene, I mean, I don't like the concept of market guru because market is very smart. It is like a holding water in your hand, bare hand, for a longer time. So I would be very happy if you call me as a student because one has to learn a lot. And since you talked about valuation, exuberance, and momentum, I just want to tell you that when I gave sell call on EKI and BCG, Breadcom Group, there are some young people who challenged me that you are too much and you don't give importance to exuberance and momentum. Now see these two stocks, they are down 75%. What I want to tell you is that don't compromise totally the valuation. When crash comes, your wealth erosion will become permanent. So that is what I want to say with these two examples.
चलिए बिल्कुल and golden words shell coming in from Mr. Chokalingam.
Absolutely.
And the good part also is that we learn from markets on a daily basis. So that's going to happen today and going forward as well. So on that wonderful note, thank you so much, gentlemen. Thank you, Ruchit. Thank you, Mr. Chokalingam, and Shail, as always, for sharing these valuable insights with us and being with us here on PTTV. So with that, it's a wrap on Market Today, but lots more coming up for you. Stay tuned, and many thanks for watching.